Hey guys, it's Mr. Oxy again. It's like Thursday evening. It's still March 25th, and here I am again. We talked about the stocks and the market crashing earlier today, and earlier on I was chatting with Jude Zhao on our community page in the comments section, and I mentioned to Jude that I have a friend who's a financial advisor, and every time the market plunges, whether it's for a day or a week or a month, or if there's a correction or something like that, then he ends up having to talk people off a ledge. So I thought, I had so many questions today. Should I sell? Should I get out? Is now the time to get out? Where is Oxy going from here? Thought I may as well capture some thoughts and make another quick video. I'm not going to keep you too long on this one. I just wanted to sort of talk at a high level about Oxy and sort of discuss what's going on and where we're going and what's in store for Oxy. It's like, is this panic station? What's actually happening here? So the big question that everybody's asking is like, what's next? Many people have already asked me, should I sell? Well, Oxy's gone down. It was at $32, $33, and now it's at like $26, $27. That's quite a steep decline. Now you want to sell? So I've said to a number of people who asked me if they should sell. I asked the question, what's your cost basis, right? Because if you're really concerned about Occidental and where it is, and by the way, you rightfully should be concerned. You should always be concerned about your investments. But if you really think about it carefully, I said to a number of people, you have three options. You could either say, I'm going to sell at whatever price, I'm going to buy more because it's cheap, or otherwise I'm going to do nothing and I'm just going to hold. I'm not in a position to tell you whether those decisions are right or wrong because I don't know your situation. I don't know your financial situation. I don't know what your investment objectives are. I don't know what your earnings are. I don't know what your time frame is. I don't know anything about you, so I cannot really comment on that. But what I have said to a few people is this. I asked them, what is your cost basis? And let's say, just for argument's sake, your cost basis is $13.50 on Occidental. And now it's trading at 27. Okay, so you're with me on the math on that one. Well, your cost basis is $15 and Oxy is trading at 30. Sell half of it. Then you've taken all your money that you invested off the table. And then the rest of the other half, proverbially speaking, you could just let it run. And if Oxy goes out of business, you haven't lost anything because you got all your money back. And if Oxy goes to $100 a share, you'll kick yourself because you said you'll be saying, I should have stayed in that position. But at least that way you can mitigate risk. Otherwise, if you're in a position where you've already achieved a gain of 150, 200% because of your low cost basis, take a little bit of profit off the table. And then you don't have to panic when it goes down like this. But anyway, this is what I wanted to show you earlier on. And unfortunately, I screwed up on the video there. But this is basically a snapshot of the S&P 500. And it's kind of a cool feature within my TD Ameritrade account because I can literally click on any little block or segment within this grid. And then when I click on the actual little little block that I've selected, then it pops up a little thing like this. So in this particular instance here, just for the sake of demonstration purposes, I clicked on this little red block over here, and it shows me that Occidental, and by the way, this was at the end of the day, was down 36 cents, which is 1.33%. At the time I made the video earlier today, Oxy was down 3.38 or 3.36%. So this is actually quite a bounce back, if you will, even though it ended negatively during normal trading hours, in other words, by 4 p.m. But this is what the board looked like. And if you looked at the close of today's market, and if you looked at the video that I posted earlier, it was mostly red. The whole thing was basically just red. So this is actually quite a bounce back for the market as a whole. But look at Oxy. So it closed at $26.70, which was down 36 cents for the day, which is 1.3%. And then since close or after hours, it was trading at $27, which is up 30%. 30 cents. So effectively, it kind of recovered that loss that it closed at. And then there's a comment here saying shares of energy companies are trading lower as crude oil falls on concern over the latest COVID measures in Europe, which could weaken demand for the commodity. Come on, guys. I mean, like, we're up to date on this. We know how this works, right? The media says COVID, 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 and then tomorrow they'll tell you that, whoa, the supply is lower or demand is up, and India and China are consuming more than what we expected, and OPEC this and that, and now there's a ship stuck in the Suez Canal, and like, it's just media stuff. Just ignore it. Uh, do what I said earlier. Either hold your position, sell a bit and take some profit off the top, or otherwise say, hey, it's cheap, I'll buy some more. Look what happens every single time. And you guys have stayed with me here for months. And by the way, I appreciate it. And I like the interaction that we have on the channel, because we collectively all get educated by commenting and chatting and discussing our investments, in this case, obviously, particularly Oxy. The fact of the matter is, every time we get a spike, even if it's a tiny little spike, there's a pullback. Spike, pullback, spike, pullback, spike, pullback. Now we're in this area over here where we actually achieved a price of over $30, and boom, we have a pullback of back to $27. Is this a surprise? No, because we've seen it before. In fact, we see it. It's cyclical. The market does this. There's a reason why the market looks like that, and there's a reason why it's called a market. It goes up and down, and the market makers are making merry. How about this one? So what I did here is, just to give you sort of a more clear picture or clear vision of Occidental, I selected a 6-month chart, and I selected Oxy. Oxy is this big fat black line over here, and you can see here it's kind of a bottom feeder. And then they all spike in November, and that was related to OPEC and a whole lot of other news stories. But what I did was I overlaid ExxonMobil. I'm not sure what this color is. It's probably like a purple color. And then Chevron gets pink. I didn't select the colors. It's just the graph people do this. And by the way, I'm not a technical analysis. I'm not a graphist. I don't. I kind of like the rear view mirror approach. I like to look forward rather than backwards. And then I also selected Conoco, which is kind of like one of Occidental's peers. And you can see Conoco is this thin black line over here. Now, it doesn't matter which one is above and which one is below. What I wanted to show you is that the trajectory of these 4 major oil companies, Occidental, ExxonMobil, Chevron, and ConocoPhillips, pretty much form the same trajectory and pattern for the last 6 months. They pretty much look the same. It doesn't really matter where they are today or where it's trading. They are all following the same trajectory because they are oil and gas majors, and the price of the commodity has spiked. And over the past few months since January, it has been very, very good for these companies, with Brent and WTI sort of in the $60 range, $65 range. It's all good. This is okay. At these prices, these companies are making money. How about this one? So this is CFR, and I thought I'll just take a quick look here and sort of see what the guys are saying. And I don't want to be a hypocrite and say analyst schmanalyst, and now I'm looking at the analyst report. But let's just take a look here. This is March the 20th, so it's just a few days old. The 12-month price target, $30. If you're happy with a 10% uptick in Occidental, stick with it, see where it goes. If you're in a profit situation, take a little bit of profit off the table so that you can remove some of your panic. That way, one risk will mitigate the other, and we'll all be happy and smiling. Anyway, the price target, $30. The recommendation is hold. That's what I'm doing right now. I'm holding. How about this one? It's from Market Edge. They say stay long in Oxy. By the way, for every positive analyst, you can find a negative analyst. So if I wanted to include the street and show you Jim Cramer's sell for the past 3, 4, 5 months, I could have done that, but I didn't want to do that. I just want to show you this is a positive view from Market Edge. It says stay long. It upgraded Occidental from neutral on November the 23rd. And since then, Occidental is up 108%. So guys, did you buy Occidental in November, or did you buy prior to November? Are you up 100%? Are you up 150, 200%? Whatever the case might be, I gave you my recommendation. I told you what I think. There's the opinion score, strong. The power rating up here on the bullish end of the chart. Hey, you know what? Analyst schmanalyst in this regard. Maybe I'm also the analyst schmanalyst, so whatever. Let's look at their price targets. On the high side, 40. That'd be nice. The mid-range, 29. That's kind of where it is right now. It's at 27. and on the lower end, 21. Hey, you know what? If Oxy is 21, I'm buying. It's a moderate buy right now. 5 guys say buy, 8 guys say hold. Nobody says sell according to tip ranks. So that's kind of where it's at. So this median, 29.10, is the average there. I'm okay with that. It's all okay. What do the bulls say? They say Oxy has a dominant position in the Permian Basin. It's the cheapest source of production in the US, and it's expected to be a major growth engine in the next few years. What do you think? Oxy generates more cash than it spends, which means that once the balance sheet is fixed, it can restore those nice, chunky dividends. I'm not in a hurry to receive a dividend. I'd rather see the stock recover, the debt paid off, and the balance sheet fixed. Oxy Low Carbon Ventures is synergistic with Oxy's chemical business and Oxy's EOR portfolio holdings. Those are the sort of three highlights reel positions of the bulls. What about the bears? Because I want to be objective here. They say, even though Oxy's Permian wells exhibit very high initial production rates, they also decline very quickly. Well, we saw that when the market crashed. The EOR segment is very capital intensive. It is, it's true. And of course, we know what Vicky and the team have set for themselves as a CapEx budget. And so far, it looks as if they're going to stick to it. And then the last one is the oldest one. The Anadarko acquisition stretched Occidental's balance sheet. Well, we know that, and obviously Occidental, and by the way, this is not unique to Occidental, has a tough time, or would have a really, really tough time if we have very weak commodity prices, again, which currently we don't have, lucky for us. So things are okay. Anyway, those are the bulls, those are the bears. Where do you sit? You can tell me, because this is your turn. Tell me what you want to do. Are you buying? Are you selling? Are you holding Occidental? By the way, if you like my my video content, please subscribe and let me know what you think. But anyway, I look forward to chatting with you in the comments, hearing what you say, and let's see where Occidental goes from here. Have a good evening. It is March the 25th. It is Thursday evening. It's good night from Mr. Oxy. Sleep tight, stay safe, stay away from COVID, and take care. Bye-bye.